rates for you on the screen, 18,140 thereabouts, 18,100 actually on the Nifty is broken, so 18,084. Starting on the back foot, pretty much in tandem with what the SGX Nifty was suggesting. Sensex also down about 0.3%, but the market breadth is even, Steven. It's tilting a bit in favor of declines, but just around that flat line. Let's take a look at to what are the stocks and sectors which are performing today. On the sectors, it's mostly all red today. It's the PSU banking names which are on the back foot. Central Bank of India reacting to the exposure it has to go first is down about 4%. You also have a similar reaction coming in on Bank of Baroda. Then other names like Punjab Sind Bank, PNB, UCO Bank are some of the other names which are on the back foot. IT is under pressure, especially Emphasis, because the US regional banks cracked overnight. Emphasis has over 80% exposure when it comes to US. A large part of their revenue comes from the financials and the BFSI, so that's seeing a crack. And similarly, Tech Mahindra, Emphasis, Coforge, these are some of the other names which have started on the back foot. In terms of the result reactions, Spandana Spurti is one stock that we want to talk about, and then of course Indigo, because the reaction will be coming in from the go first turbulence. So Indigo is starting high by around 5 to 6% if I have it right on my screen. Yes, a 8% gain coming in there, and the railway stocks continue to chug along. So RVNL is up a good 6%. Home First is seeing a result reaction, 3% higher on that one. Positive reaction coming in on crude users. So Kansai, Nerolac, AkzoNobel, these are some of the counters. Bombay Burma is also in focus because they have some exposure via ICDs, etc. to go first. So Bombay Burma is down about 8%. And then DCM Shriram, which is a result reaction, is down 4%. Ditto for UCO Bank as well, 4% cut coming in. And the other names, as I pointed out, from the PSU banking space is really the space which is taking a bit of beating. So Central Bank, Bank of Baroda, Union Bank, IOB, Bank of India, these are all the counters which are on the back foot around. But overall, it's a tempered start for the market, but not far away from what we were expecting.
Yeah, and the Nifty Bank is already down 0.5%. The frontline index as well, as we speak, it is falling further. So we'll just have to wait and see where those rates stabilize. For now, even keel when it comes to that market breadth. Nooresh, let's get in a quick take on what your first trade is and your view on the index.
So going defensive, looking at Biocon, that looks interesting for a mean reversion trade. From this 235 to 38 levels could go towards 260 in the short to medium term. So liking Biocon at current levels for a buy.
Okay, and let's find out Kunal's first trade, and he believes that one should be booking profits in Bajaj Auto. That's the advice coming in from Kunal. But let's connect then right here in our studios with Sridhar Sivaram, who's investment director at Enam Holdings, here to talk about his market outlook, view on earnings, as well as lots more. Thank you so much for taking time out. Lovely to have you with us in our studios as always. I wanted to just start off by talking about the backdrop right now, given the fact that it seems like all eyes are on the US Central Bank in terms of action. But what do you think is going to be the guiding light for our own markets? Will it be earnings to a large extent, the macros, or just a combination of it all?
No, I think the macro plays a large role in deciding how the markets over a medium and long term moves. And the macro setup both for India and for the US isn't looking that great. Even though you can say that for India, large part of the rate hikes is already over, but for the central bank to actually cut rates, your inflation number has to sustainably go below 4, which we don't think happens at least for this entire financial year. So you'll have higher rates for a longer period of time. And same for the US, that for them the inflation number has to go below 2 before central bank can pivot. And we don't think that happens, at least for the next 6 to 8 months. So we will see higher rates for a longer period of time. And specifically, US will have more issues because they are coming off, almost a 0% rate for the last 7-8 years. And now we are seeing the rates higher for so long, which is why all these banking related crises we are seeing in the US. And that will manifest itself in various other forms. As of now, the resolutions have been very quick and fast, but we don't know how long and how many of them they can rescue. So this is a space which has to be watched carefully. Our broad view on the market is that we haven't done anything for 18 months, and maybe for another 6-8 months the data will be very choppy. So it's better to be cautious, protect your capital, and build your portfolio which is a bit more sustainable for the next possibly 18 months.
So you're talking about the banking crisis which US is facing, and so far, yes, the contagion has been limited. But back home, do you anticipate any sort of impact? I know the banking system in India is very, very stronger than what it is in US. But anything to watch out for?
So actually, there's a big difference between US banks and Indian
Yeah.
banks, that we've always seen a very high rate. And if you just look at, say, mortgage as an example, barring the two COVID period when the mortgage rates actually fell to 6.5%, we've broadly been in the 8 to 9% range of mortgage for a very long time. The last time the mortgage rate fell below 7% or closer to 7% was in 2001. So actually we're used to a higher rate. So I think maybe the people who borrowed at 6.5, now that the mortgage rates have gone to say 8.5, they may have some issues. But even there, we think the tenure gets extended to some extent. So we don't see a large, big issue as far as financials are concerned. We are actually very bullish because in the last 5 years, all banks have cleaned up their balance sheet so well. Most banks have extra provision cover due to COVID. They had kept COVID provisions, and if you look at the financial numbers, I think the NPA numbers are far lower than what most banks had guided. So we think we are in a sweet spot right now, but it has to be watched carefully. As you mentioned, one of the corporates had issues yesterday, so you have to just watch the space carefully. We are quite bullish. We are overweight on financials.
Well,
Both.
that's exactly my next question, the corporate that you talked about, because these shocks and surprises keep coming into the system. And for now, what we understand is this is something which is not provided by the banks, and this they didn't have much inkling about it. At least they didn't have any discussions around that. And the last time we spoke, I think you did mention that you were quite positive on infrastructure and airports as a vertical, which is seeing a lot of favorable momentum. In context of that, aviation as a sector, Indigo is the only investable name. How should one approach it? Airports as well as aviation.
So one is that in infrastructure in general, if I speak that if you look at the budget numbers itself, they have sort of allocated a 33% increase in the capex spending. We are going to spend almost say 10 lakh crores just in capital expenditure in the government's budget, which has a multiplier effect. So we think that this space in the last 3-4 years has seen significant focus from the government, be it roads, ports, railways. So we are quite bullish that the spending will continue here. This is a very tough space to buy stocks on a generic basis, because this comes with its own challenges, which is, one is the corporate governance challenge, two is the fact that you could have these sudden shocks because of various other reasons. So it's a very stock specific arena, but we are quite bullish on the space.
Okay, fair enough. Now let's discuss your outlook when it comes to the commodities sector
Sure.
as well, because I would say that that's not insulated from shocks either, because of the kind of news flow that we get, very cyclical in nature. What makes you, tilt towards this space given the kind of
So actually, as we speak, we are not as bullish as we were in the past. So actually,
Has that changed
yeah,
recently,
significantly. So in the last 2 years, if you see, commodities were easy trade because 2 years back they were trading below half-time price to book, and there was a easy runway. I mean, these stocks are up, say, whatever, 2 times, 3 times, all of them have moved up significantly. As you see slowdown in the global economy, which is recession in the US, whether they call it a recession or not, slowdown in Europe, and even China post the opening hasn't really picked up as one would have expected. Having said that, my own personal view is that the non-ferrous still looks quite exciting, because the spending as far as new mines, capex has been so limited that as the economies pick up and the spending comes back into infrastructure, look at the amount that US economy is trying to put in infrastructure, we think the non-ferrous will come back faster. So if at all one has to look at, we are more bullish on the non-ferrous than ferrous.
Okay. Now, this does not feature in your list at all, but I'm just venturing and asking your outlook. The new age financial tech companies, we actually had some interesting data called out last week that a lot of them, barring Nykaa, have seen a very smart recovery from their 52-week lows. Is it very case specific? Are you tilting towards this space? Would you look at it?
So our initial view when these IPOs came, we were not looking at them at all, because we really didn't understand the valuation that they came at. Now that, as you mentioned, they've corrected almost 60-70% in some cases, we are starting to engage with them and trying to see if there is a case as far as a profitable business model is concerned. I wouldn't say that we've jumped into it as of now, but we are watching the space carefully. At least now it looks like in some of the cases, some of the companies, there may be a case to look at. Maybe valuations are still slightly high, but you have to do your groundwork. You never know, when markets are volatile, you get a chance to invest in them.
Are you getting a chance to invest in IT then as well then?
So IT, at least we have mixed view within our firm. I mean, we saw the guidance given by one of...
I think that's the case across the street,
Yeah.
right? Everybody's divided.
Yeah, so my personal view is that the bigger problem for the IT sector is not what is happening with the banks in the US and what impact it will have. This is a very short-term impact. My bigger worry is what happens to generative AI. Because if you see that one of the easiest work that gets replaced by generative AI is actually coding. So Amazon just launched its generative AI specifically for coders called Code Whisper. So basically, if you're coding, from what I understood from experts is that if 10 people were doing coding work for a particular job, now one person can do that in half the time. So basically, one way of looking at it is that your productivity will go up. But the other way of looking at it is that if your revenue model is billing based on man hours worked, then your revenue will fall substantially. Also, you will need to hire far lesser people than what you need. And if you look at the Indian IT space, almost 30 to 40% of the Indian IT space is people who have lesser than 1 to 3 year experience bracket. So basically, your pyramid is very bottom heavy. So these are the coders, and your attrition is very high here. You will need to hire far lesser people here. So I think this is a space that has to be watched very carefully. I think they're getting disrupted already in a small way, which is when I look at Infosys guidance or look at their number of people. They had 5,000 lesser people between Q3 and Q4. I would be very cautious at this market because the thing is moving very fast, and it has to be, maybe some of the smaller companies will benefit, but for a large company to move the entire business model is going to be tough. I personally remain underweight on this stock. As I said, there's split view within our firm itself.
But you're not alone. World Economic Forum is talking about how 25% of the industry jobs are likely to be taken over by AI. And similarly, in India itself, there are reports talking about how 22% of the jobs can actually change the texture in a very, very large and meaningful way, given the way AI and generative AI, as you talked about, is disrupting the space. But shifting focus back to the financials, PSU banking space is one thing that you were positive on.
Yes.
Do you think the best of the earnings or the best is already baked into the price?
So I think best as far as stock price is concerned, I would say in terms of the rate of change has already happened. Because they were trading at say 0.3 book, most of them are closer to one-time book. But in terms of earnings, we still think that most of them, if you do your work properly, can still give you earnings growth of say anywhere between 30 to 40%. So we are expecting that some of these PSU banks can just give you the earnings related return. So no longer, the re-rating is possibly behind us now, but earnings related returns can come because provisioning is something that they have made so much over the last 2-3 years. I don't see too much of provisioning requirement in terms of credit cost that they need in their financials going forward. So you still have some cushion coming from the credit cost. So your top line may grow at say 12-15%. But your bottom line could grow much faster because of lower credit cost requirement.
Would the rationale for looking at the insurance space as well be very earnings driven?
So I've been a bear on life insurance for a while, and I don't think my view has changed much. And this is so what happened in the budget was exactly my view, that the life insurance space is basically a play on tax arbitrage. Some bit of
the under-penetration of just the pure product of life insurance is something to play on?
So this is actually a myth that life insurance is under-penetrated. So if you look at life insurance penetration in India is 3.5% of GDP. Country like China is 3% and their per capita is $10,000 and we are at $2,500. You look at any of the emerging countries, take Brazil for example or Indonesia for example, we are far higher in terms of penetration and when it comes to life insurance. And these data are also published in the economic survey. People don't read it, but a lot
Thanks
of
for
this
breaking
data
that misnomer for us.
yeah, so I think, I mean, I can go on and on life insurance over penetration. The total number of outstanding life insurance policies in India is about 350 million. Number of households in India is about 300 million. And if you assume that only half of them are insurable, you're talking of 2 life insurance policies already per house right now as we speak. So, as I said, this product, they have not been selling protection, they've been selling a savings product. So, if you talk about protection, maybe we are under penetrated, but I don't think the life insurance companies like to sell protection. They prefer selling the easier product, which is savings product, which again the tax arbitrage in my view will go over a period of time. A large part is already gone, but whatever is left will go. Looking at the way the government's mood is, the way they have addressed the debt issue, mutual fund issue, I think this is the last product which is available, which is tax free, which will go in my view.
So bearish on the insurance space as a whole. When you say ancillaries, can you just specify for us what is it exactly that you're looking at?
Which ancillaries?
That's what I'm asking you in terms of, is it auto anc that you're looking to play, or as a space? How would you be looking?
No, I think that auto ancillary as a space is very stock specific. So if you look at auto overall growth for India and you take a 10-year CAGR, you'll see that none of them, passenger vehicle 10-year CAGR is about 3%, two-wheelers about 1 or 2%, commercial vehicle is also 2-3%. So over a 10-year period, autos as an industry hasn't done well, but there are stock specific or pockets where you see growth.
Okay.
So currently if you see EV seeing a lot of growth, so companies which are addressing the EV market are seeing growth. So I think it's a very stock specific opportunity that we are bullish on.
Even for engineering maybe within this space?
So even engineering, actually a lot of the stocks are very expensive now, so we are relooking most of the engineering stock plays. But given the capex that I spoke about earlier and the government capex, some of these engineering companies and also some of the water related companies are benefiting because the government's focus on water and sanitation. So it's become very stock specific. So one has to be careful when we say engineering. There is a whole host of companies.
We would love to get stock specific and ask you the exact names, but the issues of compliance is something we have to deal with. But Sridhar, given the fact that India has now become the most populous country, we have demographics which are quite favorable with respect to the young population, consumption as a whole and urban consumption at that, the QSR plays, the multiplex plays, travel tourism. Is that something that one should look at seriously?
Yeah, so actually we are seeing a K-shaped recovery. I do a lot of road trips, travel. So consumption, wherever it is rural, we are seeing some slowdown, maybe because of the inflation that we've seen over a period that is coming off right now. But the impact of that we are seeing as far as consumption in the rural space or any discretionary consumption which is at the lower end of the basket. Higher end of the basket, we are seeing boom. So you look at the company which recently got listed on the which is basically a dealers of high-end cars. They are fully sold out. So you can clearly make out that high street is doing very well, and discretionary spending when it comes to slightly lower end is struggling right now in terms of same store sales growth or even in terms of their actual sales growth. So I think this may continue for a while. This is actually a global phenomenon. Look at what is happening to Louis Vuitton. I mean, they are sold out, they're hitting new highs every day. So I think we are following a similar pattern where, spending as far as at the higher end is much better. So that's how I would look at, say, consumption and discretionary consumption, that you have to look at pockets where you are really seeing high growth and stay with that. I don't see that changing in a hurry right now.
I don't know if you're contributing to the wallet share, Louis Vuitton, but you certainly are when it comes to your wonderful trips. What's been the latest one? You've been penetrating deep into the jungles.
Yeah, so I did a 10-day road trip to Assam and Arunachal, and it was quite an eye-opener because the amount of infrastructure spend that has happened in Arunachal and
are those your clicks?
Yeah, these are all I. I'm also a passionate wildlife photographer.
I remember seeing your pictures from Antarctica. That was, I think, 4-5 years back.
Yes, 2019.
And these look spectacular.
So this is the Nal Se Jal program which the government is promoting.
So and I was quite. Was it a work trip that then became?
Well, if you're a fund manager, you're never off work. work, right? So I saw a board which
But if
spoke
that's
about.
what work looks like, I want to be a fund manager.
It's quite interesting. It's quite interesting traveling to some of these places because one of the program which the government really is focusing on is getting tapped water to people. And I only read about it. And when I was passing a village, I saw a water purification unit. So I got off to see what exactly is happening there. And then as I walked across the village, every house had a tap outside their house. So the Nal Se Jal program is actually there. This is a remote village in Assam. So I think a lot of work has happened as far as some of these government programs, even roads, infrastructure. The Pradhan Mantri Gram Sadak Yojana is something you see when you go to village. No longer do you see mud roads in the villages. They are actually concrete roads. So I think a lot of work. So only if people step out of their houses and move to that is when you get to see a lot of this work.
We would love to do that. I think we should all call Nikunj and kind of tell him that we need to do the road trial to get the on-ground reporting.
So next time I'll call one of you guys.
Please
so you can
do.
cover the story also.
I think that sounds like a brilliant idea. But for now, we'll take your word on that. So infrastructure is one thing which clearly is working, and then travel and tourism, where Sridhar himself has been contributing quite a bit when it comes to back home as well. Thank you, Sridhar, for joining us today and talking to us about a whole host of issues. But for now, the market is not that excited. We are seeing that the market is just around that 18,100 mark on the Nifty, 18,068. So seems to have stabilized around that mark. Sensex too seeing a cut of around 0.3% the last time I checked, so 0.4%. As far as Sensex is concerned, let's take a look at the Bank Nifty as well, because the PSU banking names was the space which was putting pressure on the market, and that continues to be the case right now as well. It's one of the top losers as far as the sectoral indices go. The realty and FMCG have definitely made a bit of a bounce back. So Sobha is one stock which has moved into the green brigade as well. And then of course Varun Beverages, which is also a result reaction, is seeing a bit of a green tick. The big stocks which are making moves include names like RVNL, Seat Limited, of course, they suddenly spiked as much as 6%. Don't think it could only be the reaction coming in of crude prices, because a 6% surge in Seat definitely deserves mention. And then Indigo, Aavas Financiers, IRFC, Sapphire Foods, Aptus Housing, these are some of the names which are holding up in the green. On the losing side continues to be the PSU banking names, as well as BBTC, which is Bombay Burma, DCM Shriram, Indus Tower is on the back foot, Bosch Limited. So some of those counters is something that we are seeing a bit of a negative reaction on as well. So overall continues to be very, very stock specific. Let's pull up Tata Steel as well and see, is there any reaction coming in on that counter, because the numbers as far as India business is concerned was a very strong beat, but maybe it's a sell-on news which is working out. SpiceJet, the flashes for you on the screen, wherein they are talking about reviving 25 ground aircraft. Remember, they have been continuously getting funds from government's ECLGS plan, and that is something that is working well. They've already mobilized 400 crores to get the grounded fleet back. So important clarifications coming in from SpiceJet, and that's the reason that stock is up around 3.5%, because after the 9% domestic share which Go First commands got out of the window, there was worry of what will happen with Go First. But for now, the clarification coming in from the SpiceJet team as well. But moving on and talking about more coming in from the cement space, Ajay Kapoor, the CEO of Ambuja Cement, states that the management is happy that the efforts that they have taken to improve the overall performance is working out, and we can see that in the Q4 performance as well, wherein the volumes were better than expected and overall performance was in line with expectations.
The second quarter post the change in management, and we are very happy to share that the efforts we have taken to improve the overall performance of the cement business has started to yield results. It has been another exciting quarter to see our progress on various initiatives such as operational performance, synergy, business excellence, which have resulted into substantial improvements in the business parameters. Last quarter, we set out on a challenge to redefine the supply chain and logistics for our business. We are happy that we reached a positive outcome in the state of Himachal Pradesh to address a logistical challenge faced by our companies. Ambuja and ACC together are symbiotic with strength meeting legacy, and with our strong capex program under the Adani Group, it will position the business as a strong force to reckon with. On the growth part, we are committed to increase our waste heat recovery capacity to 175 megawatts by Q2 FY25 from existing 70 megawatts as on March 23. Under GeoClean, we plan to accelerate higher consumption of waste material with consumption of alternated fuels of 213,000 tons in this quarter, we recorded a growth of 16% quarter-on-quarter. The company has achieved TSR of 8.8% in this quarter compared to 7.6% in the previous quarter. Our target is to increase the thermal substitution rate to 30% by 2027. As mentioned before, Ametha integrated unit is set to be commissioned by Q2 FY24. Our top priorities continue to be water governance, sustainable livelihoods, women empowerment, rural infrastructure, and community and social inclusion.
Let's bring on board Rakesh Arora, founder GoIndiaStocks.com, to talk a little bit more about the outlook on the cement sector. Thank you so much for taking time out. In light of the fact that it has been pretty robust for the cement sector on the whole, there's been recovery in profitability for a lot of these companies. We have also seen a large capex pipeline. Demand has been fairly strong. What's your outlook on the demand scenario, and do you believe that we could see a pre-election spend which could give a boost going down the line?
Are you asking me?
That's right, Rakesh. That's for you.
Okay, so see, obviously demand outlook is extremely bright. As we have seen during previous pre-election run-ups, that governments do tend to fast track all the projects, and that really pushes cement demand up. But this time there's another factor which is at play, is that you had a new entrant, Adani Cement, come in, buying Ambuja and ACC, and they have been going through a little bit of turmoil in the last 3 to 4 months. And competition, which is Ultratech, Shri, etc., have been pushing more volume into the market, trying to capture market share. And that is why there's a little bit of disappointment that cement prices haven't really moved up the way people expected, given the demand outlook. I think this scenario will continue, so you would see better volume numbers, because now probably Ambuja and ACC have also found their bearing, and they will also push volume. Company yesterday guided for kind of 15% growth for FY24, so that is a big number. Industry demand would be around 8-9%, so they are trying to push more volume. So I think volume, there is no challenge. Everybody's trying to push more volume, and there is demand also. It's the pricing where the challenge is.
Yeah, pricing remains a bit of a challenge, but do you think, Rakesh, that Street was baking in a lot when it comes to the margin improvement, and that doesn't seem to at least factor in the Q4 numbers? Do you see a big upside, let's say Q1 of this year, etc.?
Yeah, so meaning the margin improvement has come in because of cost reduction. Energy prices have kind of fallen quite sharply, and there would be some follow-through margin expansion in Q1. However, it will all depend for FY24 as a whole, how the industry really behaves. Because if everybody is trying to push volume, pricing can take a backseat. So the improvement in margin because of cost reduction will play out in Q1. Beyond that, it will be all price discipline. So if the industry doesn't really come together, there could be a little bit of disappointment in FY24 at least.
Sure, Rakesh, but last year or last to last year was marked by a lot of consolidation in the sector. Do you think that is largely over now?
See, last year, meaning there was huge cost pressures, and cement prices did go up. This time we are seeing a reversal. Basically, cost pressures are going away, and cement prices, if they can sustain at this level, I think we should be okay. But if they come under pressure, because normally you see price increases pre-monsoon, and then during monsoon prices tend to go down. But this time around, the price increases haven't really happened. So it's a little bit of a, I would say, tentative situation, given the way industry players are behaving. But overall, scenario is still okay.
My question was consolidation with respect to the M&As that we had seen over the last couple of years. There was a lot of consolidation on that front. You think the M&A activity will now stabilize, given the fact they're all taking a lot of brownfield expansion as well, and the capacity is expected to come up?
No, so there are not too many companies which are, up for sale, and not too many sizable companies left, actually. So there are little bit tidbits here and there. So we are hearing in media reports about Sanghi Cement being on the block. So that is probably on the cards in the near future. But beyond that, I'm not really seeing too much activity, and there's not too much of scope also now. given that the big chunk capacity has already been taken out.
Enough. Let's shift focus to the entire metal space. Rakesh, your read-through of the earnings that we've got from Tata Steel.
So Tata Steel, India business did really well and surprised positively as compared to what people were estimating. And Q1 also, I think there will be some follow through because cost reduction is happening there also. Coking coal prices have fallen from from $360-370 to $230, so that's a big improvement. But the wild card here is China. China's demand hasn't really come up despite the reopening and all that expectation. And at the same time, we are staring at a recession in the developed world, largely US, etc. So demand outlook globally is not looking that robust. So while cost pressures have come off, steel prices are also coming off in a big hurry. So China steel prices have actually dropped by almost 20-25% in the last 2-3 months. So that effect is now starting to come into India. Indian steel prices are also moderating. So I think there will be a little bit of tick up in margins in Q1, but I think that is the kind of peak for FY24. Things are going to moderate from there on. So, meaning results are good, valuations are okay, but no real hurry to buy.
Okay, good to get your thoughts on not just cement, but your view on Tata Steel as well. Thank you so much, Rakesh, for taking time out and joining in. I just want to revisit what's happening with the markets, and we're down 0.5%, so continue to remain at that level. Perhaps that fall is capped to that extent. Mind you, the broader markets are still managing to hold out in the green. Names like Bombay Burma, Manappuram Finance, Indus Stars, Jindal Saw, as well as Bharat Forge and IDBI Bank continue to languish in today's trade. And you've got an Interglobe Aviation, largely on account of the news coming in from Go Air, as well as a SpiceJet that are racing ahead in trade. Thanks for staying on with us, still tuned into First Trades, and let's move on from one corporate voice to another then. And the chemical industry, let's get in a demand check and find out what the outlook is for a company in specific, GHCL, as to what the sense is in terms of their capex plans, as well as the outlook post the textile business demerger. Mr. R.S. Jalan is the Managing Director of GHCL and now joins us on the show. Thank you so much for taking time out. Let's begin with numbers because it was quite muted in Q4. Where do you think that moderation came from? Was it realizations? Was it volumes? And what are the early demand trends suggesting down the line?
See, the margin, if you look at in this quarter, has been almost on the same level what it was in the last quarter. And of course, the volume was a little lower because of some breakdown which happened in the plant. The production was down by around 40,000 tons. But overall outlook of the business looks to be good going forward as well.
Okay, but what are the early indications that you're getting as we enter FY24, given the fact that last quarter was one of production issues? What kind of demand momentum and production momentum we should anticipate in the coming months and quarters?
See, if you look at in the domestic market, all the sectors, be it the glass industry or be it the detergent industry or the chemical industry, every consumer is doing good. And therefore, we are seeing a very healthy demand going forward. Approximately around our estimation is the demand growth will be in the range of around 5% from here.
Okay, so the demand is expected to be 5 to 7% higher, but what about realizations? Because globally we are seeing that there is a lot of new capacity getting added in China. What will happen to the prices going forward?
See, if you look at in terms of the China definitely in new capacity is coming in around 1 to 1.5 million ton. However, the indication from the China is that their solar demand is picking up very significantly. And the estimation are that this extra production will be consumed in the China itself. Therefore, we are not seeing any major volume coming into India from China. In terms of the pricing, yes, some softening of the pricing happened. This is primarily because of the input cost has also gone down. And because of the input cost going down, we are passing on this benefit to the consumers.
Walk us through the latest details when it comes to the demerger of the textile business in terms of how the listing is expected to take place. What is the exact timeline?
Yeah, the demerger has already taken place on 1st of April. and all the shares has been allotted to the shareholders and it has gone to their demat account. And hopefully by this month end, the listing of the textile share will also happen.
Enough. I'm sorry I missed that. In terms of the listing, when is that expected to take place?
Month end, the
Month
listing
end.
will take place.
All right, fair enough. Now, I wanted to also get in a sense as to the lower caustic soda ash prices. Has that impacted soda ash demand, since caustic soda can also be used as an alternative?
Yes, to some extent, yes. Out of the total demand, around 100,000 tons has been shifted towards the caustic soda. However, all the consumers are not in a position to kind of move to caustic soda. Silicate is the particular industry which can move, where already the volume has gone to the caustic. However, the solar investment in India or solar glass investment in India is happening, and that will compensate this demand of going to the caustic. And overall, therefore, the demand of the soda ash will remain to be a positive territory.
I just wanted to come back to the point of soda ash, because there were other reports suggesting that some of the other players have taken price cuts of around 2 to 5%. Could you talk to us about what you are seeing on the ground?
In the month of April, we have already taken a price reduction of around 3 to 4%. And like I said, this price reduction is primarily because of the cost going down. And because of this, the margin will not be impacted significantly from what we have achieved in the last quarter.
What about FY24 as a whole? What kind of growth momentum do you envisage with respect to the volumes that we can expect? What would it translate in terms of revenue growth for you? What would be the margin profile in FY24?
See, 24, the volume will be more like a static because, like I said, some breakdown has happened, and because of that, we have lost around 50,000 tons of the volume. But in spite of that loss, still our volume will be in the same range what it was in the last year. And pricing also, like I said, pricing definitely will be some softening will be seen. However, the margin will not be significantly impacted from what we are achieving right now.
Okay, and what's the outlook in terms of your capex plans?
Capex, last year we have spent around 350 crore, and in the next 23-24 also we are going to spend around 350 crore, and that is primarily in one of the new basket of the product we are adding into the business, which is vacuum salt. We'll be spending the money on that, and the greenfield project will be spending the money on the greenfield project.
What's the current capacity utilization like? And just wanted to get a sense on the balance sheet as well. How does it look after the demerger?
You see, if you look at in terms of the overall, after the demerger, our top line is approximately around 4,500 crores. And we are in net positive cash flow or net zero debt. We have approximately around 500 plus crores on the balance sheet as a cash. And our debt is around 400 crores. So broadly, we are in 100 crores of positive cash. And overall, we made a profitability of around 1,100 crores after the tax. And our EBITDA in this year, 23-24, was 1,500 crores plus.
And if I have it right, you were earlier talking about making some inorganic acquisitions as well. Any update on that front?
We are still working on that, but not yet. We have not yet finalized anything on that.
Is any timeline, any geography, any more color that you can give us? What's the entire rationale of looking for inorganic acquisition? Is it going to be some area specific?
It is going to be definitely on the chemical side, and we are looking at more on the specialty chemical. And our objective is only to add some of the basket of the product into the GSL, and that's the logic of going for it inorganic or merger and acquisition.
The size of this acquisition that you're looking at?
At this point of a time, definitely board has to take a decision, but approximately around 500 crores to 1,000 crore of investment we are looking at.
Mr. Jalan, also with respect to the export exposure, it was quite limited for you. If I have it right, it was only 5 to 10% that you were getting from exports. Going forward, is that expected to improve materially, your exports contribution?
I don't think so, because like I said, in the domestic itself, there is a good demand of the soda ash, and the margins are always going to be better in the domestic market, and therefore the volume will not be increasing from more than 10%.
Okay, Mr. Jalan, we'll let you go on that note. Appreciate you joining us on the show. So volume is something which is going to be pretty much static year on year, and pricing, we have seen a bit of a cut in the prices in the month of April on account of the commodity prices declining, energy prices declining, and that's not expected to impact the margins. They'll stay around that 30-32% mark for GHCL. But the big story that we're talking this morning is what's happening with the entire aviation sector. Let's go across to my colleagues. Samir, first up, there are more developments which are happening, especially with respect to the comments coming in from SpiceJet. Samir, tell us what's the latest?
This is a good sign for SpiceJet airline because now they have mobilized their plan to revive 25 of its grounded aircraft, and for the same, the airline will be using the fund that has been received as part of government ECLGS, that is Emergency Credit Line Guarantee Scheme. So this scheme that was initiated by government was to provide financial assistance to the ailing airline, to the airlines which are going through financial problem. And now SpiceJet says that they have mobilized the plan to revive 25 of its aircraft. And not just this, the balance sheet of airline looks stronger after the hive of its cargo arm, that is Spice Express. So SpiceJet is aggressively looking forward to expand its flight operation. And once these 25 grounded aircraft, majorly of it include Boeing 737 aircraft, and once these grounded aircraft joins the fleet, this will help the airline to improve its top line or the flight operations. So SpiceJet is looking to make these 25 grounded aircraft back into their fleet in next couple of months, and they will be using majorly the fund that has been received as part of government emergency credit line guarantee scheme. We all know that SpiceJet was supposed to receive around rupees 1,000 crore as part of this ECLGS. And out of that 1,000 crore, around 400 crore has already been utilized by airline to revive the grounded aircraft. And much of its fund will also be used for another 25 grounded aircraft. So in nutshell, SpiceJet is looking current scenario as an opportunity to expand operation and to enhance the fleet size. Also, what we are seeing that the airline, which is having a fleet size of around 71 aircraft, majorly of it include Boeing 737, the various versions like 700, 800, even 737 MAX aircraft. So this will help airline to perform much better at domestic front as well as on international sector as well. So positive sign for SpiceJet as well as for Indian aviation sector.
Appreciate your time. Thanks very much, Samir, for joining in and giving us those latest details there on SpiceJet. So as of now, they are mobilizing their plans to revive the 25 grounded aircraft. Well, let's stay with aviation then, and Go First has clearly been hogging the limelight since yesterday. What is the latest now? We understand that the lenders are meeting after the airline filed for their voluntary insolvency proceedings. Now, sources tell us that the lenders have an exposure of over 6,500 crore towards Go First, and the airline didn't even inform them before filing for this this insolvency. So my colleague Ankur Mishra joins in. So Ankur, what exactly is the latest?
Yes, sources say that Go First lenders are set to meet soon after the airline has decided for voluntary application in the insolvency court. Now, sources also say that lenders were not informed. There was no formal communication which was sent by the company about this application which they had an intention to file. Now, as soon as the court admits the petition as an official procedure, lenders will receive notices from the court, and future course of strategy needs to be decided by the lenders on how to go about this case now on recovering of the dues. As far as the total exposure is concerned, we learned through reliable sources that at least an exposure of rupees 6,500 crore is likely to be there from the airline, and lenders like Central Bank of India may have an exposure of over rupees 1,500 crore. Similarly, Bank of Baroda may have an exposure of over rupees 1,400 crore from the airline. Now, as soon as the insolvency proceedings begin in the court, the lenders will have to present their case in the court, and accordingly, the strategy is being chalked out by the lenders. Now, we need to wait and see how soon the court admits the petition so that the actual IBC proceedings begin for Go First.
All right, let's delve into this story in greater detail, understand a little bit more about the background, how it reached such a situation. Joining in on the show, we've got Dheeraj Mathur. He's aviation expert and independent director, ex-partner, PwC and retired IAS. We've also got Mahantesh Sabarad, independent market expert. Thank you so much, gentlemen, for taking time out. To begin with you then, Mr. Mathur, I just want to understand, basis your understanding of the sector as a whole, was the industry aware about these kind of troubles that have been brewing at Go First before the kind of declaration and announcements that were made just last evening? And how difficult a flight plan has this been on? For how long have these troubles been brewing?
See, I think Go Air ordered 72 A320 neos from Airbus in 2011. And there were delays from the very beginning. In fact, Pratt and Whitney was unable to supply engines on time, so the delivery of the aircraft got delayed. And then subsequently, these engines, the particular engines that are on this aircraft, started developing technical problems. And I think the COVID period disrupted the manufacturing and the supply chain. And it would appear, though PW is not very forthcoming about this on this matter, so this is partly conjecture, it would appear that it hasn't been able to get its supply chain up and running. It has accepted that they have supply chain issues, which they feel will improve by the end of the year. So this issue was very much there. Indigo also has the same engine. They've been having problems. There are other airlines, international airlines, China Air Express, for example, that have also had trouble with the Pratt & Whitney engines. So, and then, if you see, there in December 2019, 7% of their fleet was grounded. That number is increased to around 50% by December last year. So all of this was happening. If you look at the, and it was out there in the open. And I think when Go Air submitted their summer schedule to DGCA this year, I believe they had cut back compared to last year by about 40%. So I think the Go Air issue, the troubles that they were having with Pratt and Whitney were very much in the public domain. There was nothing secret about it.
All right. Now, Mahantesh, I want to understand the implications from the lender's point of view. Financial creditors have an exposure of over 6,500 crore rupees, the likes of IDBI Bank, Deutsche Bank, Central Bank, BOB, the list is quite extensive. This is clearly going to be a huge hit for a lot of these financial creditors.
Yeah, in a way, it is going to be a huge hit for these financial creditors. But also let us understand that there are certain underlying assets, particularly the aircrafts on order that they have, which can realize certain amount of money, including termination of leases. Some of the leases that they have, these outstanding, if they are restructured, there is a potential that they could be recovering some portion of the account. But the recovery, I don't want to sound very optimistic. The recovery will not be exceeding anywhere 25, 30 odd %. So the exposure of the banks will remain uncovered for quite a duration. A revival may not necessarily also help the airline. So it's going to be very tough unless some suitor comes in and decides to take over the loans. It's going to be very difficult.
So, Mr. Mathur, if we could just understand from your outpoint now, given that the airline has filed for bankruptcy and now they have, now the insolvency procedure is going to play out, do you think, as Mahantesh said, unless we see someone really swoop in and save the airline, there isn't really going to be any other route?
No, see, funds can come in from three sources. One, they filed a suit against Pratt & Whitney in the US, and they've claimed, I think, 8,000 crores as compensation. I would expect Pratt & Whitney to settle this issue out of court because they appear clearly to be in default of contractual obligations. So I would imagine that that is what is likely to happen. Besides the reputational hit that Pratt and Whitney is going to take because of this. Second, the second source of funds would be the promoters. I mean, the Wadia Group is a very strong group. Some of their companies are Britannia as a cash cow, and they're very strong companies. And so the promoters can also, they have put in, I think about, I read about 3,500 crores, 3,600 crore rupees in the last 2-3 years. So that could be a second source of funds. In terms of the third, finding a suitor for somebody to buy out the Wadia stake, that might be a little tough, given the situation right now. I would imagine there won't be very many people who would have the appetite. And as someone said, it might be easier to start a new airline rather than revive or buy an airline that's in the red. So. That's my personal assessment, that they will get money from that, from Pratt and Whitney. They will get that. If not 8,000, I don't know what the number will be, but I think it would be wise for Pratt and Whitney to settle this out of court, because they've admitted that they have supply chain problems. They've got 2 rulings against them in the Singapore arbitration. So, they clearly don't seem to be on a strong legal wicket.
You're expecting an out-of-court settlement. Mahantesh, if I were to look at it from the other standpoint of what this is doing to some of the other aviation majors, there have been some new players as well that have recently come in. We're seeing, for example, Interglobe Aviation or Indigo, that stock is flying high in today's trading session. Given that it is quite a competitive landscape in the Indian skies right now, this is going to be very advantageous to a lot of these existing players, right?
Already there are, if you look at the Indian aviation market now, we already have a lot of players already in the market. That means what I'm essentially saying is that it's become quite competitive as it is. Gone are the days when a decade ago we used to have count airlines on the fingertips, 4-5 airlines would be there, with some of them hogging the market share. Today we have the market share fairly spread, and the number of players are too large, and the aviation market has started to grow once again post the COVID block that we saw. So I would reckon that while the industry is certainly attractive, it's become very competitive, and some of the financial aspects of running an airline are quite tough to really overcome, particularly the exchange rate, particularly the fuel costs, etc., which are financially burdensome for many airlines, including the top ones. So I would reckon that while there are other players that do exist, unless you have a bit of consolidation once again happening, you will not see the industry players remaining healthy.
Okay, and so Mr. Mathur, I just want to understand, given that this is the next fallout that we saw after the Jet Airways saga took place, do you think that there are any lessons now that can be learned for some of the existing players?
Certainly. Negotiate your contracts with your suppliers, engine and aircraft suppliers better. But I mean, so this is just plain bad luck as far as Go First is concerned, right? Now they bought Airbus's fuel-efficient planes, and that was they were one of the early airlines to go in for those so-called green planes, and so they did everything right. They've ordered 72 planes. Pratt and Whitney is it's a reputed engine manufacturer. So this is just plain bad luck that has struck them. I guess, I mean, and it can happen to anyone, because most of these things were beyond their control. If they don't have engines, how are they going to fly the aircraft? They don't fly the aircraft, how are they going to get the revenue? A lot of their costs are fixed. They can't do anything. The lease, rent, and so on. The debt, and I believe they haven't defaulted on any of the debtors. They've defaulted on they have not defaulted on the financial debtors, the defaults are largely on the operational lenders, the vendors and the lessors. So, as I said, the lesson would be, yeah, be very careful about contracts. But when the counterparty defaults on a contractual obligation, when it defies an arbitration award, which is issued once and then reconfirmed, I mean, what else can go first do? So I think they've done the sensible thing of coming to the NCLT. The whole purpose of the bankruptcy court is to provide them a safe haven, a temporary safe haven, while they attempt to restructure their operations. You know, in this case, they'll have to wait for the engines to be supplied and for the compensation to be given and some additional funds to be raised. But they should keep the airlines operational, because if they shut it down, it'll be very difficult to start again. And that is one big lesson we learned from Jet. But I think it's a sensible thing they've done, going to NCLT. That's what the bankruptcy court is for.
Fair enough. Let's see how that materializes going forward, but a lot of lessons to be learned. Thank you, gentlemen, for joining us with this discussion. In fact, talking more about Go First and what's happening across the board and across airports as well, let's go across to my colleague. She's at the ground to help us understand what's happening at the airports at this point of time. Akansha Khajuria joins us now. Akansha.
We are joined by a few of the passengers here who have come from Dubai to Delhi and now had to go to Patna but are stuck here because Go First has cancelled the flights for the next 3 days. आप बताइए कहाँ से आ रहे हैं, कैसे आपको पता चला कि फ्लाइट कैंसिल हो गई?
हम लोग अबू धाबी से आए हैं और अबू धाबी में जब बोर्डिंग करवाने गए तब हम लोगों को पता चला कि यहाँ पटना के बाद हम लोगों का फ्लाइट नहीं है। अच्छा। अभी वहाँ से हम लोग बोर्डिंग करवा चुके थे, अंदर जा चुके थे, वहाँ से फिर रिटर्न भी नहीं जा सकते थे। फिर यहाँ आए तो यहाँ काउंटर पे गए, वो बोल रहे हैं कि 7 डेज के बाद आपका रिफंड मिलेगा, लेकिन अभी जिसके पास पैसे नहीं है वो क्या करेगा? हम लोग पूछे तो वो बोला कि वो हमारा प्रॉब्लम नहीं है।
तो पैसा रिफंड कर देंगे। अगली फ्लाइट कितने की पड़ रही है आपको पटना जाने की?
अगली फ्लाइट हम लोगों को 19,000 का पड़ रहा है, इंडिगो का।
तो आप करवाएंगे? नहीं
कर, पैसे नहीं है ना, अभी खाने का सोचे हैं या फिर 19,000 इतना ज्यादा पैसे, हम लोग लेबर आदमी है, 19,000 हम लोग अभी अर्जेंट में कहाँ से लाएगा?
तो अब आप तो दिल्ली में फिर फंस गए हैं, कैसे आगे कैसे जाएंगे पटना की तरफ?
अभी देखेंगे, अभी घर से पैसे मंगाएंगे या इधर उधर कुछ करेंगे, उसके बाद बस या ट्रेन मिलेगा तो उसमें जाएंगे।
क्या एयरलाइन को आपने ये सब कुछ बताया कि आप आबू धाबी से आ रहे हैं, इंडिया में आके फंस गए हैं, कुछ वो कोई और फ्लाइट करा दे पैसे अगर ना वापस
नहीं, ये सब हमने बोला है कि हमारे साथ हमारे पास पैसे भी नहीं है, यहाँ तक बोला। फिर भी वो बोल रहे हैं कि हम लोग आपको मेल कर चुके हैं, लेकिन हमारे पास कोई मेल आया नहीं है। अच्छा। हम लोग बोले कि फिर आप दूसरे फ्लाइट में हम लोगों को ये टिकट दो, तो बोले हमारे पास वो उसका पॉलिसी नहीं है।
So as you can see, people are stuck here. They've come from abroad here in the national capital, but are stuck because the flights have been cancelled here and all across the country by Go First.
Very much for giving us that ground check. A lot of passengers there stranded who had already booked their seats and tickets on the airline. On that note then, let's also focus in then on the latest with respect to Interglobe Aviation, which we will be doing because that stock continues to, remain on a tear in today's trading session, largely on the back of those troubles that are brewing at Go First, as Anisha was alluding to, seems to be the only rather investable option when it comes to the aviation space. That stock currently quoting at 21.93. What a brokerage is saying then. We've got Somit standing by to give us a quick heads up. Somit?
Well, brokerages are kind of bullish on this recent announcements, given the fact that yields and market share gains are pretty much expected for Indigo. However, none of the brokerages have currently increased their target price or their rating on Indigo. Now, Macquarie is saying that the market structure of the aviation industry is moving towards duopoly, with Indigo and Tata Group controlling nearly 80% of the market share. They're also saying that the benefits at this time, as compared to when Jet Airways had shut down, would be lower for Indigo, given the fact that Go First market share is limited around 6 to 7% and yields are already at a higher level as compared to when Jet Airways had shut down when yields were at a lower level. So the benefits at this time would be limited according to Macquarie. Credit Suisse is saying that the Go First filing for bankruptcy can benefit Indigo in many ways, and they are saying that reviving an airline post bankruptcy is much difficult than starting a new airline, given the fact that Akasa Air was very much swift in starting its own airline. So they are not expecting any current airlines to bid for Go First in the NCLT proceedings. And Jeffries is saying that the market disruption is caused by the shutdown of an operation is likely to reduce the competitive intensity in the aviation space, given the fact that there are a lot of players in the industry. The competitive intensity is expected to go down, and they're also saying that airfares would be benefited. There could be a rise in the airfares because of the strong aviation traffic demand that we have been currently seeing. On the market share front, they're saying that if the shutdown prolongs for Go First going forward, then there could be some market share gains for the existing players, with Indigo likely to benefit the most out of all the airline industries in India.
Joining us with that take coming in from brokerages as well. So yes, definitely there's something to gain, given 67% market share of Go First is up for grabs. But whether the others are in a position to really bid for these assets or not is something that we'll have to watch out for. In the meantime, for the market, it continues to be the FMCG plays that are actually bucking the trend. So Asian Paints is higher by 2%. Again, that crude decline is something which is supporting the sentiment for some of these paint companies. You also have HUL, Nestle, ITC as some of the top gainers at the Nifty level. On the losing side, wanted to highlight what's happening with Indostar. Remember, they've come up with an OFS which was at a discount of 23% to yesterday's closing price. It is Indus Towers, which is there on the screen. I'm talking about Indostar Capital. That stock should come up for you on the screen because they have announced an OFS which is at a discount of 23%. So that stock is locked in lower circuit. Sasken Tech is another stock which is reacting to earnings. So that stock will also be lower because the profitability was down almost 45% sequentially. And lastly, Aztec Life, wherein the numbers were rather weak, reported a loss for the first time in 15 quarters. And there's a leadership change as well. So Aztec Life is the other stock which should be down anywhere between 10 to 15% on account of that news flow. But with that, we're slipping into a very short break with the news that Nifty is around that 18,090 mark.